essentially what these revisions are is when they do the non-farm payrolls numbers, there's two surveys that make up the full number, right? One of them is called the household survey and one of them is called the establishment survey. And between the household survey and the establishment survey, they are exactly that. They are surveys, meaning that they call the people's homes and they call the businesses. At the households is one, the establishment is when they call the businesses. So when they call the households, they say, are you working? Right? Are you a new employee? Are you an existing employee? Yeah. And then when they call the institutions, they say, how many people have you hired and have their wages gone up or down? And then they extrapolate that over the population. All right. Now they're large survey samples. They're reliable. But the revision, and again, this happens every single year, the revision is such that they take the unemployment insurance that's been paid and they count that. If you hire an illegal immigrant or an undocumented worker or a migrant, you don't pay unemployment insurance for them. So when you call a company and you say, how many people you hire? They say 20, right? They just know how many people they hired. They don't necessarily, because when they call, they don't ask the immigration status of the new employees. They just ask if you have new employees. This is not a political statement. It's a fact of the two different ways they the two different ways that they ascribe the numbers. And when they get the number, the revision, that is people who've been, their unemployment insurance has been paid. Now, you also might say, I am a 1099 consultant to several different companies. If a company brings me on and they mistakenly say they hired me, they don't pay unemployment insurance for me, so I wouldn't be in that either. So there's several levels and factors of workers that would not show up. But having said that, this was the largest number in 16 years. Okay, since 2009, so it's actually more than 16 years. It's 25 years. So it's or 23 years. So it's the largest number in 25 years, up or down in terms of revisions. So it's a very, very big number. Now, should the market respond to this yet? Probably not to the downside, because the way that I see it, tomorrow we get Jerome Powell speaking on the economy, and he can now, if he chooses to, he can now choose to use this and say, okay, look, we had 800,000 fewer jobs than I thought we did. So I think we're going to cut 50 basis points. Now, he would never say it in those exact words, right? He would never do that. But he has cover if he needs it to be more aggressive in his rate cuts. And that otherwise he can say, no, we already knew about this revision every year and we're going to stay the same. But he has a reason to cut if he wants to cut now.
I've seen the Kansas City Fed President, interview.
Yeah.
And he was mentioning they need to see more data before rate cuts. And
yeah.
Is it something kind of recession fear in the markets, investors, or?
I think right now, the Fed's job is not to prevent recessions. Okay, the Fed has two mandates. It's maximum employment and price stability.
That's correct.
Recessions are not in their mandate. So as much as people don't want them to cause a recession, almost every recession in the last 50 years has been caused by a Fed.
Okay, yeah, makes sense. What about the news coming from Japan? I think people are assuming that gradually we will see interest rates going up in Japan, and that may affect on the yen carry trade as well.
Yeah, I think that news is important. I will point out that tomorrow night or tonight? No, it's tonight. Bank of Japan Governor Ueda speaks, and that's more important than when the market participants think of it. So if you'd asked me this yesterday, I would have given you a different opinion. But then I looked at the schedule and see that he speaks tonight. I'm going to wait and see what he says. The Bank of Japan has made a point of saying that we will continue to hike rates if we need to. But they've also said that if the yen isn't functioning properly within market circumstances, within the market, then they will hold off. So his words today will mean quite a bit.
No,
By the way, I want to compliment Ben Wilcox on telling me how much he's up on a percentage basis.
well done. Yeah.
That's very well done, Ben. Ben says, good morning, up 5.1% today, and I'm done for the day. That's amazing because that can be $5,100, $51,000, $510. That's none of our damn business, Ben. That I got to commend you on that. So thank you for doing that.
It was being good student of Iaccino, that's why. Good morning, Queen. Ben says that's weird. You would think they would be able to just look at how many new people are paying income tax using SSN numbers. The IRS can probably compile the date in 10 minutes. Seems like they're using techniques from the pre-60s.
Yeah, they are a little bit, Ben. I would agree with that, but I wouldn't necessarily go to the IRS because in the household survey, people who are 1099, like myself, a decent amount of my consulting income is 1099, and I don't pay any of that until tax day. I wait until April 15th of the next year. Now, there are people that prepay, and I do prepay a certain amount every month, but it's an estimate. And you have no idea how many 1099 employees I've taken on in my consulting firms based off of that. So it's just that may not be as accurate as you think. Also, immigrants wouldn't necessarily be paying monthly withholding taxes either, illegal immigrants. So, by the way, I talk about immigration a lot in a lot of my other duties. I'm the child of immigrants. I spoke Italian before I spoke English. Both of my parents legally emigrated from Italy to the U.S. My father never spoke perfect English.
But
Never
legally part is important, I think.
No, the legally part's important. They want to, people say, well, they were lucky. They were lucky. They won an actual lottery back in the 50s and 60s. They had lotteries. And those lotteries started what you call chain migration, which were able to bring people from your family over. That's the chain they're talking about when they talk about chain migration. But also people from your town. There's entire towns in Italy that now have more descendants of that town in Australia than they have in Italy. The town has fewer people than people who are from that town living in Australia. So it's chain migration was a real thing, and I think it was a real good thing. But anyway, I don't want to.
I suppose it shaped the future of states as well.
Yeah. You want people who want to assimilate into the country while holding on to their culture, not people who want the country to change to their country's culture.
No. That they can stay in their own country. You're right.
Yeah.
Leo says, buongiorno, Bob. I have also Italian ancestry.
Piacere, Leo. Piacere di conoscere.
You see, we're not just talking about the economics. We also
learn all kinds of things here.
Cool. All right. Well, last week we covered Peter Lynch's 10 myths to avoid about stocks. And I just checked before coming up to live with our legal team. It's still pending approval. So it will be probably today or tomorrow. It will be available on TradeZero LinkedIn page. If anyone interested to have the copy of it, they can find it on TradeZero LinkedIn page. It will be there under Bob's blog.
Awesome.
So that's it. And today's topic is measured move exit. Well, what is exactly measured move exit and how it's differ from other exit strategies?
All right. So simply put, a measured move is where you measure areas of price action to predict the next move. Okay. And they're very reliable because markets, whatever you're seeing on your chart is two things. It's mob mentality and math. All right. That's all it is. So I had a friend that I used to do CNBC with, his name's Scott Nations, really, really nice guy. But I was talking about the chart patterns and he said, oh, to me, that just looks like a bunch of lines and squiggles. And I said, it is lines and squiggles, but behind every single line and every single squiggle is the mob. Okay. It's the market, it's human emotion, and it's math. It's Fibonacci's, it's Gann. It's all these things we see elsewhere in nature presented to you in the form of price action on a chart. Okay. And don't dismiss human nature as a driving factor for what happens on a chart. When you're looking at a massive move on a price chart, you're seeing human emotion in that move. And it's either fear or greed, but it's emotion. Make no mistake. So when you're looking for measured move targets, you're looking for the next logically human nature driven mathematical target on a chart, and you're using previous price action to define it. That's what measured moves are. You don't have to guess. Okay, you measure the move out and you say, okay, this is my target. And as I've mentioned before, a target is not necessarily where you exit a trade. A target is where an action is required. So whether that action is to take off part of the trade, take off the whole trade, tighten your stop up to break even, or tighten it up to a smaller loss, or even add to it if you're a trend trader. A lot of trend traders, when they have a winning trade, they add to it because they take some of those wings and double the position or triple the position. I don't do that. That anticipates me being able to say how far the move is going to go. I use measured move targets as a high probability place where I know the market may pause. Doesn't mean it's going to stop, but it may pause.
Can you walk us through on any real trade scenario?
Sure.
I'm more visual person. I need to see things to understand instead of verbal. Leo says, Bob, your camera looks amazing today regarding measured moves. What tool do you use, or do you eye the size of the opening bars?
Well, I'm about to show you.
There you go.
All right. So here we have ARC Innovation ETF. Okay. Now, notice that I ended it in late July or mid-July, right? And I did that for a reason because I actually traded this. Okay. ARC Innovation ETF had a sideways channel, a well-defined sideways channel. And you can see I've marked it off here. Okay. Now I'm showing you TradingView for a reason. And that reason is they have a tool that I can manually adjust to make my life easier. All right. And I'll show you that on the next chart I'm going to show you guys. But so anyway, when I see a horizontal channel like this, I don't trade inside the channel. Okay. And I'm just going to put a horizontal line in the middle of the channel. It's going to be approximate. Okay. It's not going to be the actual. Oh, look, we've got this dotted line here. Okay. That's the actual middle of the channel. Can you guys see that blue line? This one that I just put in here. Yeah. So that's the middle of the channel. Let me actually make it a little bit thicker, and I'll make it like this purple color. Okay. All right. So the red line is the approximate middle of the channel. All right. When you get a channel breakout, they have a high probability of going 50% of the width of the whole channel. That's a measured move target. Okay. Based on research. Now I'm going to show you something here, something that I do to make it easy for me when I'm doing my measurements. Now, if I'm going to measure this channel, the high you can see is approximately, well, the top of this channel is about 45.60, and the bottom of this channel is about 45 or 41.58. So in order to get the middle, you subtract 41.58 from 46.50, you get 492. Half of that is 246, and you add it to 46.50, right? So I'm just going to do that real quick here. 246 plus 46.50 is 48.96. Okay, so that's your measured move target. Now I'm going to take the same tool and put it right around 48.96. Okay, let me just coordinates 96. All right, there's 48.96. So half the channel on top of the upper part of the channel. Okay. Now notice where else that comes in. Right around the support area of this particular congestion here. Now, some people might say, well, what about this low? Okay, fair enough. It might go up and hold up at that low. But if I were to put a line where I thought the key support for this was, it'd be right around here, or resistance rather. It'd be right around 48.39. All right. So now I'm going to delete this. And I'm going to show you what I use this particular tool for. I have my Fibonacci's here. Okay. And I measure from about here to about here. And notice that I have the 150%. I'm off a little bit, but it's right around that that 48.96 area that we had. 150 is above 49 even. I don't have this measured exactly. I'm just eyeballing it right now. Okay. But now I'm going to go advance into the future here. And look where it went. Here's the 150%. Okay. It went up there and turned around and collapsed. Now, some people might say, well, it went through there. You missed a little bit of profit. Yeah, I missed a little bit of profit, but I got my profit. I got my target. My target was hit. Now, maybe I could have waited a little bit longer and gotten to 49.46 here, or maybe I could have had the perfect target here at 49.56 on the next day. But I had a target where my profit was reached. And that's what I care about with targets. Okay, I'm going to go ahead and put that horizontal line again at 48.96. It's right about here. It's close enough. It's 48.92, but I'll fix it in here. 1, 2, 3. All right. And you can see that the price got up there, closed above it, failed below it, and collapsed. All right. And it shot up there pretty quick. Now, those of you that say, well, the resistance is actually right here, right at the bottom of this little rotation, you're not wrong. I mean, this candle hit up there and failed. This candle hit up there, broke above it, but then closed below it. But then this next day, we blew through it up to my target. Why? Because it's a measured move, and measured moves are very accurate. Now, something I didn't do before we were talking is I didn't look to the downside. Let's say that I said, I don't like ARC. I'm only going to take a short trade here. I'm going to do the reverse here on the Fibonacci retracement. I'll start at the bottom and go to the top. And the 150 is right around here. It hit that on the downside too. You can see that right here. So when it broke the downside of that channel, it hit 150. Now it went a lot lower. It doubled the channel, which, by the way, is your second target. So if you're the kind of person who says, well, I'm going to adjust my stop on target number 1, and I'm going to cover on target number 2. On the long trade, you adjusted your stop and got out profitably. On the short trade, you hit target 1 and target 2. So measured moves on a horizontal channel, 50% of the width of the channel, and then 100% of the width of the channel. That's what measured moves are. They're moves that you measure based on past price action. Can I go into another one right away, or do you have a question for me, anybody?
If you want, you can go more.
All right, let me stop sharing there. Let me go to Palantir. All right, here's Palantir. This has not happened yet. Okay, so I showed you one that happened already. This has not happened. What I have in Palantir is a potential double top. Okay, here's top number 1, and here's top number 2. Now, doubles always have measured move targets. And I'm going to use this tool again first to see if this is a high probability double. What do I mean by that? Well, I'm going to measure from the left-hand high to the base. Okay. Now, the right-hand high has to come in within 25% of this. So why do I use the Fibonacci tool? Well, I've changed my Fibonacci levels in this platform to GAN. What GAN levels are is they go 12.5% each level. So they go 0, 12.5%, 25%, 37.5%, 62.5%, 75%, 87.5%, and so on. GAN levels to me are very, very reliable, and there's more levels to them. Now, you notice a lot of the GAN levels are very similar to the Fibonacci levels. For example, the Fibonacci is 78.6, right? I've got 75. It's pretty close, right? And again, I don't care if price blows through my target. I don't use these levels for stops. I use them for targets. All right, so they're pretty close. Now, what makes this a high probability double? The left-hand high, the right-hand high is within 25 basis points of the left-hand high, plus or minus. Okay, so here's the 75. I've measured it from here. This is 100. 75 is 80.79. and the high here is 80.92. Now, had this been 80.78 or 80.70, I would not have a double top yet. Not one that I would trade. Now, if this continues to go higher and it breaks 125 or 82.49, it's no longer a high probability double top for me, and I won't trade it. Now, that doesn't mean it's not going to work. That's not going to reverse and go down, but the percentages drop quite a bit. So I won't trade it. All right, now, let me get rid of this. How do I get my measured move targets on this? I flip those same GAN levels upside down. I measure from here to here, as opposed to from the high to the low. I measure from the low to the high. My first target is 175 extension. So 1.75 extension. My second target is the 200. Now, there's another qualification of doubles, and I know this is not what we're talking about, but a double top is a reversal pattern, and a double bottom is a reversal pattern. Okay? So in order to have a reversal pattern, you have to have a move you're reversing. Well, this is a move up. Here we've got a double top. This is the move that's being reversed. If I measured this, okay, and the 175 or the 200 exceeded this low, I wouldn't trade it. Because now my measured moves are not within the move that the pattern is reversing. All right, but in this case, it is. So I'm going to go back here. So my first target on this is 75.67, and my second target is 74.82. 75% extension and a 100% extension, or a 175 retracement extension or a 200 retracement extension, whichever way you want to word it. Doesn't matter to me. Now, what triggers it? Well, for me, this is a daily chart. I need to get a close below the base of the double top. And that comes in at this low, which is 78.23. So I'm not trading this yet. I'm just noticing it. People ask me how I can look at so many charts in one morning. This is staying like this, and I'm not touching it. I know exactly what I'm looking for. Okay. Now, I showed this to somebody the other day, and they said, Bob, you've got a rotation zone in there too, don't you? Yes, I do. I have a rotation zone in here. Okay. Here's the cross up. Here's the rotation zone, angling and widening, just like we talked about in the rotation zone session. Here we get to move into the rotation zone, right? So what do I do on a situation like that? I draw a best fit trend line here. And when I get a green candle close above this, I'm going to get long, right? Which I did. Now, how do I figure my target for that? Right? Well, I could go all the way back in time and try and find a high somewhere in here. But this data right here is over a year old. This is not as powerful as recent data. So I do the same thing. I find a measured move target. Now, before I enter the trade, I find a measured move target. And what do I do to use that? There's a tool in here called trend-based fib extensions. But I've also turned these into GAN, just for the record, okay? And I go from a low to a high to a low. And look what I have here. All kinds of targets. All right? Now, my first target is not the 25 because that's the high here. All right? So if it goes up to the 25 and turns around, I'm going to exit that and start looking for the double. All right? So where's my stop on this? It's below here. I've actually got it below the rotation zone, but you can see the red part, the 21 exponential moving average, is really close to that low. So as this turns around, the red's going to move up and kind of line up with that low anyway. So it's going to be really good support. But if it breaks and closes below it, I'll get stopped out and I'll go short my double. But if we get above here, my first target is the 0.375 extension, and then it's the 0.5 extension. I've got two targets. Now, because this is an extension, a retracement extension, okay, I'm going to use this 37 to tighten my stop. I'm going to use this 50 to take off 25% of the position. And then if it turns around, I'll have tightened my stop to here. The entire trade will be profitable. So I'll exit 25% here and I'll move my stop to below the 37.5. Okay. From that point, I then have the 62.5. If I get a close above the 62.5, there's almost a 70% probability that we're going to get to the 75. It's almost 70%. It's very high. And then I'll wait and I'll exit the rest of it at 87.90. So I've shown you 3 measured move targets, right? Now you can use the Gann retracements and the Gann retracement extensions in your the Fibonacci. You can use the Fibonacci retracements and the Fibonacci retracement extensions in your Zero Pro platform right now. And you could just do the math near the levels that match up with these levels, and you'll be able to be pretty close. A lot of the times these levels get breached and they reach right around the Fibonacci levels anyway. Okay. But these levels to me are more reliable. The Gann levels are more reliable. But this stuff is just simple math. As you saw with the channel, as you saw with the double, you could do that math with a piece of paper and a calculator, and you know where your targets are. You just take 75% of the move, 50% of the move, 100% of the move, and you'll be able to figure it out. This is what measured moves are.
Got it. Thanks for that, Bob. Is there any specific key factor or market conditions in order that you decide you can use the measured moves, or you just apply it for all the trades?
When I have trade signals, I use the measured move targets if I don't have another version of a target. All right. So for example, in a retracement like this, or I'm sorry, a trade rotation zone like this, if I had some price action right here that contradicted the measured move target, I would use this price action, because recent price action is more important than past price action. But because in order for me to find old price that could give me a target, I have to go all the way over to here. By the way, look where this 50% comes in, right at this high. I love when that happens, by the way. Look where this 62.5 comes in, right at this high, right? So you see these things match up, and they match up for a reason. They match up because it's human nature, it's human psychology. That's why these levels exist, because they match up to the prior human reaction to the levels in the past.
Gotcha. And what we can consider as a common pitfalls or mistakes related to measured moves?
Process these things out before you enter the trade. The common mistake is saying, well, it's gotten up to the 37.50. I'm already up 2.5%. I'm just going to cover it. That's the most common mistake. The beautiful thing about these measured moves is you don't have to think. You just measure them. Well, how'd you get your target? Well, it's a measured move target. What does that mean? Well, you should watch Bob Iaccino and you should join TradeZero. You'll find out. It's just, it takes all of the emotion out of finding a target.
I was going to say that, yeah.
Yeah.
It gives us mental resilience. We're coming end of our time. If there is no more question on the chat, I'll give people in the room a few more minutes. And to say, if Bob can give us overview very quick of the measured moves.
Measured moves are based off of price action you see in the chart. No matter what you think, what you read in the financial media, what news you look at, the only thing you could be 100% sure of is price. Okay, I know for a fact that Palantir traded 80.44 today. It's a fact. It's the only fact that I can be sure of. Everything else is opinion and speculation. Okay, I can pull up Palantir's last earnings report, which happened right here on June 24th. And I could tell you that this is all factual. Okay. And I could tell you that the price action that happened here is a fact. Everything else is opinion and emotion. So measured move targets take opinion and emotion out of the equation. And that's what we need to do as traders to succeed.
Thanks for that, Bob. Ben says, excellent session once again. Thank you for that comment. Leo, would measure moves work on intraday?
Yes, they do. They work. Again, with intraday timeframes, you got shorter periods and you got to do things quicker. So practice on longer term charts, Leo. Okay, practice on longer term charts and then try and apply them to shorter term. But measured moves always work. They're just, it's math and it's emotion. You can't escape it.